please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's straight away get to the story that seems to be getting a lot of attention, and which is that the Idea-Vodafone merger now looks to be delayed beyond its target of executing it in the first half of 2018. Vodafone tells CNBC TV 18 that they are expecting an approval soon. Nisha Podar, our correspondent, gets exclusive details now on the status of this merger. Nisha, go ahead.
Thanks for that, Sumera. So, of course, there have been a lot of uncertainties regarding the approval or the DOT approval coming in for Idea-Vodafone merger to create the largest telecom company in the country. And we had been hearing a lot about the delay in the date as well. So, we do gather that August 1st could be the next target that both Idea and Vodafone would be working on. And some reports have also suggested that 4,700 crore rupees could be the fresh claims by the Department of Telecommunications to Vodafone India for going ahead with the merger. Now remember, both these numbers, the date as well as the amount, could be changed. They are subject to changes because lots of changes are really happening on ground there. But at the moment, the key highlight here clearly is that they've missed the deadline of the first half of this particular calendar year as the execution of this large transaction. What I do gather is that since there is a lot of uncertainty regarding the merger, there are huge amount of attrition. Some senior level executives have also been quitting, especially Vodafone India, and even Idea is seeing some bit of attrition. Vodafone India, for that, the situation is much more graver because they are probably seeing double-digit attrition at this point, and certain key executives have been also given retention package, is what we gather at this point. Of course, we know from sources that there has to be some job losses as Idea and Vodafone merge, and it could be to the tune of about 5,000 to 6,000 jobs as well. So at the moment, things are uncertain. DOT approval is the key at this point, but Vodafone has written to us and has denied any such claims being put forth by the Department of Telecommunications. They also say that M&A guidelines do not allow this, and they have also put out that they are expecting to receive this approval shortly. In fact, remember, if you go by history, in 2015 as well, DOT had raised claims about the subsidiary merger of Vodafone worth over 6,600 crore rupees, and they had challenged that and brought it down to 2,000 odd crore rupees. Now remember, these charges, if at all they come, would be in addition to 2,100 crores that has been the bank guarantee that Idea will have to give as part of the merger approval.
In fact, thanks Nisha for that. The Idea-Vodafone merger was announced in January of 2017. At that time, the revenue market share of the combined entity was close to 43%. And then on the back of this aggressive onslaught by the challenger Reliance Jio, the market share of Idea-Vodafone combined has fallen to about 37.6%. So it's a fall of 500 basis points in the market share of the combined entity. Yes, Bharti's also lost market share, but the loss has been less. So, this delay in the merger approval going through is also impacting the financials of both the companies.
All right, but Reema, besides Idea, you're also tracking Tata Motors?
Yes, and Tata Motors is down close to about 4% in today's trade. JLR held its first ever investor meet in Birmingham, where they've given out a medium-term guidance. They have indicated that the company is looking to, its sales growth will be higher than that of the industry. On margins, they're expecting EBIT margins to be in a range of 4 to 7%. And thirdly, they've said that the annual capex from FY19 to FY21 will be 4.5 billion pounds. So while the margin guidance was known by the street, this improvement in margins, over the investor meet, they elaborated how they will achieve it. So they spoke about it will be via cost-cutting initiatives, operating leverage, as well as on the back of product launches. CLSA believes that JLR was also cautious in its demand outlook, which is why that stock could be under pressure. They indicated that FY18 sales volume growth was lower than expected due to diesel uncertainty, Brexit, and high incentives in North America. And secondly, CLSA also believes that high capex spend will put pressure on the free cash flow. So they remain negative on JLR given the multiple headwinds, and they're saying that even on a valuation basis, it's not cheap when you compare it to its global counterparts like BMW as well as Daimler. Nomura, on the other hand, continues to maintain a buy rating, target price 495. They're saying that the current valuation is the lowest, is at the lower end of the trading band, which makes the stock quite attractive. But a lot of the analysts believe the bigger headwind for Tata Motors right now is the imposition of high tariffs on exports to the US on products coming out of EU. That was spoken about even in Friday's trade. But that seems to be the overarching risk on Tata Motors right now.
All right, so that's Tata Motors now down 3.5%, but KRBL, that's been the big casualty today. So the stock is off of its lows, but it's lost 15-16% today. It's lost 26% this month. Mangalam has more. Mangalam.
Absolutely, Sumera. So over the weekend, there were reports that came in the Sunday Guardian, which indicated that the Enforcement Directorate, they've got some fresh leads with regards to the Augusta Westland scam. And as a detail in that report, there was also a certain Mr. Khaitan who was convicted, or rather alleged as the person who was important or instrumental in routing the kickbacks. And Mr. Khaitan was an independent director of KRBL. So sentiment downtick is something that we're seeing on that stock, about 15-16%. The street is spooked. However, earlier we did speak with the management of KRBL, who reiterated that this has nothing to do with the company. Mr. Khaitan was an independent director of the company between 2007 and 2013, has resigned. They have no financial dealings with Mr. Khaitan, as well as Mr. Anup, who is the head of the company right now, was called and was questioned by the ED, but this was only with regard to this case and nothing else. The company has no relation with the Augusta Westland deal. In fact, let's hear out the management, what they had to say to us.
Mr. Gautam Khaitan was an independent director in KRBL Limited from 2007 to 2013. And Mr. Gautam Khaitan was arrested for the Augusta Westland deal, and they called me also ED, since he was an independent director in my company, what type of transactions was happened with Gautam Khaitan. And we have given all the accounts, all the statement of accounts and everything. And KRBL is no way concerned in Augusta Westland deal. Some fees of 50 lakh, 80 lakhs of legal fees company must have paid in. That's all.
Okay, and in more bad news for ICICI Bank, the stock, which is down 2.5%, Sonal joins in. Sonal, third whistleblower complaint for ICICI Bank since 2016.
Yes, that's right. I mean, the litany of woes continues. ICICI Bank has seen this, several reports of irregularities coming out. Whistleblower, like you said, several whistleblower complaints. The latest relates to a complaint received anonymously at the end of March relating to 31 accounts where it was claimed that there was irregular reporting and not adequate provisioning being done, in response to which the bank indicated that while there was a delay, they had accounted for these accounts by the end of December last year, and implying that the books presently are in order. However, there's also a complaint lodged about delays in filings with the SEC, which is again a serious sort of matter, which so this is basically keeping the stock weighed down. You think things are over, things are getting sorted, you have a new COO that's been appointed, but it keeps coming back.
All right, and Sonal, this PNB housing stock, that's just taken wings today, 11-12% higher now. How's the race looking?
As far as PNB Housing Finance is concerned, there were reports which we have not verified, which indicated that two leading players, HDFC and that's HDFC Limited, and Kotak Mahindra Bank were eyeing a strategic sort of sale in the lender. It is known that Punjab National Bank and Carlyle, the private equity investor, are looking to sort of cash out of PNB Housing Finance. But we have heard from HDFC. They have indicated that they have not expressed any interest in acquiring PNB Housing Finance. So it's not clear, how far or how true this report is, but that's really positive, because if any of these players are looking at PNB Housing Finance, it would mean the lender moving to stronger hands.
Okay, PNB Housing Finance up 11%, but surprisingly, PNB itself is down close to about 0.5%. We'll slip into a very short break. Then on that note, on the other side, we'll continue tracking all the stocks that are buzzing in trade. Stay tuned.
Hi, welcome back. You're with Halftime Report, and we have a lot of stocks which are on our radar. And now let's focus on crude and the impact that it's having on the oil marketing companies. Manisha.
Well, thank you so much for that, Sumaira. We have seen the crude oil prices quite volatile, but clearly in favor of the markets as we can see it right now. Well, the important thing is that even as the 24 oil producers in OPEC and allies have readied to increase 1 million barrels per day, the markets do anticipate that you wouldn't see that actually coming in on the ground. And the best case scenario perhaps is going to be $600,000 to $800,000 per barrel. The expectation also is that we are looking at perhaps a stronger demand scenario for the next half of this year, whether it's from Asia or the kind of supply concerns that we are seeing from many OPEC countries like Algeria, Venezuela, Iran, Angola, etc. So the view is that we perhaps have made a bottom for the crude oil prices, but then again, it is perhaps going to be consolidation from here on in this space, and that really is giving some encouragement to the consumer and the producer countries in the global markets today.
All right. Thank you, Manisha, for that. Graphite stocks like HEG and Graphite India are buzzing in trade. Surbi joins in for more on that. Surbi, Jefferies has done analysis of HEG's annual report.
Yeah, that's right. They're the big bull on graphite, Rima, aren't they? And their optimism just keeps growing because now, after looking at the annual report, the latest target on HEG is 4,400 rupees. That's a good 1,000 rupee upside from where the stock is right now. It's a four-pronged sort of approach why Jefferies is getting even more bullish on HEG. To start off with, let's talk about pricing. We know these companies have enjoyed mega price increases. So the annual average price for graphite electrodes in FY18 came to about $6,555 a ton, as opposed to just $2,500 a year ago. That's the extent of price appreciation, but that's nothing because prevailing prices are much, much higher. In fact, Jefferies thinks that the average realization for the current year could be about $12,500. Next year, it could be in excess of $13,000 per ton. So that's the realization bit. Now, to add to this, the company is also looking at boosting its capacity. So that's going to be a twin favorable impact in terms of the top line growth itself. The other aspect that Jefferies highlights, and this is important, is the improving balance sheet, the better sort of cash flow generation that's happening, because the company has become debt-free. Its cash flow has consistently improved to about 580 crores in FY18. The working capital cycle is improving, and working capital debtor days are down to just 104 now. Last but not the least, promoter shareholding has also increased. That's another positive, of course. So all of these things put together, Jefferies has that 4,400 target price, with the risk being any fall in graphite electrode prices. That obviously is the downside risk. Back to you guys.
Hi, Turbi. Thanks for that. Infosys also, it's rising in trade. The company held its annual general meeting over the weekend. This was CEO Salil Parikh's first, and he has laid out a 3-year roadmap for the company. So let's hear out Chairman Nandan Nilekani and the CEO and their remarks on this AGM.
The last 9 months, we have done a lot of things, brought in stability. We have a united team. Our focus, Salil has worked and come out with a very articulated and clear strategy. We have redefined the brand, and I think now the focus is on execution. We're all focused on execution. That's where the future is. I think shareholders will raise issues from time to time, and we'll deal with them. But I think the real focus is on our business. We want to focus on our business. We want to focus on our customers. We think this is the biggest opportunity we've ever seen. Our customers are undergoing enormous transformation and disruption, and we hope to build on this.
We created a strategy which is really resting upon 4 pillars. The first pillar is how do we build a new business in what is called the digital world. The second, we want to make sure that everything we've been doing for our clients so far in their core areas is further energized, and we are leveraging it with artificial intelligence. The third, we want to make sure that we expand the skill sets of all of our employees, and we provide an infrastructure that allows them to develop their own skills at the pace that they want as the market demands that. And the fourth, we want to make sure that localization in many of our markets becomes a part of our future so that we become part of the new ecosystem as we grow, whether it's the US, in Europe, or in the Australian markets. We developed a 5-pronged approach on which areas to focus on. And this is a comprehensive architecture that we have built with our teams, with our lead of strategy, and with all of the management behind it to drive the future. In each of those areas, we have now constructed detailed service line structures that help us to guide how the future will evolve.
All right, a quick recap then of the top buzzing stocks: Idea, Tata Motors, KRBL, ICICI Bank, PNB Housing Finance, oil marketing companies like HPCL, BPCL, IOC, Infosys, as well as HEG. On that note, get into a break. Then on the other side, Prakash Gaba and Sandeep Wagle will join in with a few trading strategies. Stay tuned. Welcome back. Just about holding on to that 10,800 mark on the Nifty. The Sensex is down close to about 45 odd points. The advanced decline ratio is deteriorated even as the mid-cap index manages to hold up in the green. So if you pull up the advanced decline ratio, right now we've got nearly 3 stocks in the red for 2 stocks in the green. Keep your eye on Asian Paints. That stock is slipping now down close to about 1 odd %. Let's get in some market opinion then from the street. We spoke to Ajay Srivastava, the CEO of Dimensions Corporate Finance Services, earlier today on the road ahead for the Indian markets and the sectors that he likes. Listen in.
This is a time when the index held firm against all odds. We are consistently seeing FPI selling day in and day out. Still it's holding. And the reason I think it is holding perhaps is a lot of churn is taking place in people's portfolios. People who are underweight on large caps are now moving to the large caps. So there is a lot of buying, pent-up buying in the system. By and large, retail investor of India did not buy large caps. They were a mid-cap story. I think that's changing. So you got a lot of demand which is coming into the system for the large cap, which is what is holding the index firm. If you flag in liquidity risk, that's the only big risk for the large caps. By and large, they're safe and sound today. If you were an LIC policy holder, you would tend to worry today saying, under which portfolio are they going to keep this dog there, man? I can't believe it. I think we have to get out of this syndrome of subsidy, cross-subsidy government, which is why PSU stocks don't give you return. IDBI Bank, let it go, let it get merged. You remember Bank of Punjab got merged with HDFC Bank long back. It happened. Centurion Bank got merged very nicely. So Bank of Rajasthan got merged very nicely. What is holding the government back to say, let's just merge these banks wherever they go, whatever the equity value they get is fine? This is crazy, absolutely crazy. Pharma is now into momentum, 3 times book value, 2 times book value, highly cash flow generating companies, leverage is not strong, US is stabilizing. There is no reason not to go in there. So I think this is a story still unfolding. Lot of way to go. Lot of private equity interest in this sector. Believe me, a lot of private equity interest in this sector. Most stocks are undervalued. So you are in a very safe territory, even if you board the bus today for the pharma. If Tata Motors turns around, I think Maruti will do a lot better than that in any case. The auto ancillary sector would outperform Tata Motors by and large if the sector turns around. So if I have to invest in this sector, I would rather go buy auto ancillaries, I would rather go buy other mainline auto companies than try to wait for a turnaround, because if they can make double digits or 9% return, the rest of the industry will do a lot better than doing today.
All right, so that's some fundamental opinion coming through for the market. Let's invite our technical experts now. Prakash Gaba and Sandeep Wagle join in. Gentlemen, good afternoon to both of you. Prakash, let me come to you first on the market. On the whole, it seems like a quietish day of trade. We're in line with what's happening in Asia. And internally, is there anything you've picked up? What's the range on the Nifty, etc., that you see? What's your idea?
I said it this morning that the trend is still intact up. We could see some support in the vicinity of 10,787. I think today's low is 10,788. So it's taken support exactly at the point where it should be. So far it is up. I would say as long as this level is maintained, we could see an upside to around 10,900. May take a day or two for that, but looks like 10,900 should hold. So far, I have 2 stocks here. I like Cholamandalam Finance. That looks good to me. And possible target on the upside in the vicinity of 1645, stop below 1620. And I also like Vedanta. Done well here, seen a good up move. Possible target on the upside in the vicinity of 245, stop below 235.
Okay, let's get in Sandeep Bagley's view as well. Sandeep, pretty quiet so far, at least at the index level. Your thoughts?
Well, pretty sideways, but with a positive bias. I am not bearish as yet. 10,780, 750 will hold, I think. And on the upside, I would talk of a 10,850, 880. That 100-point range is where I see the Nifty moving in, and the kind of advances to declines that is being seen, I think I would have a positive bias.
Okay, Sandeep, what are your stocks?
I would go with a buy in a Canfin Homes, stop loss of 360, target of 387, and a sell in a BPCL that is showing weakness, stop loss of 415, target 405.
Okay, thank you Sandeep as well as Prakash for joining in. Get into a break. When we return, we'll get the early rates from the European markets. Let's find out.